The China in Africa podcast is brought to you in partnership with the Africa-China Reporting Project at Wits University in Johannesburg. The ACRP promotes balanced, considered reporting on Africa-China relations through innovative training programs held throughout the year. More information at africachinareporting.co.za.
Hello and welcome to another edition of the China in Africa podcast, a proud member of the Sinica Network from SupChina. I'm Eric Olander, and as always, I'm joined by Cobus van Staden, the senior China-Africa researcher at the South African Institute of International Affairs in Johannesburg, South Africa. A very good afternoon to you, Cobus.
Good afternoon.
Cobus, today we're going to be talking about African debt relief, and we're going to focus a little bit of our conversation on the Chinese role, but we're going to step back and look at the bigger picture. This is a topic, obviously, that we've been covering all year long in light of the COVID-19 outbreak and the subsequent economic crisis that has ensued. So let's go to Beijing. Zhao Lijian, the Chinese Foreign Ministry spokesperson, just last Friday said that China has implemented the G20 debt service suspension initiative and signed an agreement or reached consensus on debt payment suspension with over 10 African countries. Those are his words. We'll give you a bigger update here. 73 countries, 36 in Africa, are eligible for the G20's Debt Service Suspension Initiative, otherwise known as DSSI. 41 of those countries have accepted the offer, 28 from Africa. 24 have secured debt relief from the Paris Club. Now, the Paris Club is a kind of elite group of wealthy donors. 18 of those are African, including 7 with Eurobonds, that is Ethiopia, Congo, Ivory Coast, Senegal, Zambia, Cameroon, and Pakistan. So all of that sounds quite encouraging, quite positive, like things are actually happening. However, it's actually not that simple. On July 18th, World Bank President David Malpass, he addressed G20 finance ministers and central bank governors, and he urged them to extend the DSSI through the end of 2021. Now, right now, DSSI is supposed to run out at the end of this year, and nobody really thinks that's enough time. So what he said is to maximize much-needed support to eligible countries, and this is where it gets interesting for our conversation, Cobus. All official bilateral creditors, including national policy banks, should implement the DSSI in a transparent manner. For example, he said, this is a quote, "Full participation of the China Development Bank as an official bilateral creditor is important to make the initiative work." Now, that was very interesting on July 18th, that the World Bank president, David Malpass, would call out the Chinese. He didn't call out any other country, okay? Then later on, about a week or two later, we start to see headlines coming out of Kenya. And this is our good friend Agri Mutambo, who is the foreign affairs reporter at the Daily Nation. And he wrote an article with the headline, "China dithers on Africa debt forgiveness over quote-unquote complex loans." So we're starting to get a picture now that it's not quite as clean-cut as I think Zhao Lijian at the Chinese Foreign Ministry is making it sound. And then finally, we got this little gem from the United Nations Economic Commission for Africa just last week, where they tweeted, Vera Songwe and the Economic Commission for Africa official Twitter account encourages China to honor the pledge of President Xi for China to fully participate in the G20 Debt Service Suspension Initiative to support Africa's liquidity needs in this difficult time. Cobus, it is pretty much unheard of in international relations for a United Nations entity to call out a P5, a permanent 5 member of the Security Council, publicly like that. So the World Bank, the United Nations Economic Commission for Africa have both called out China, giving us an indication that things may not be moving quite as smoothly as the Chinese are indicating.
Yeah, this is something that's made considerably more difficult by the usual way that China doesn't tend to be very communicative or transparent on these issues. So it's, we should keep in mind that in the a month or two ago, in that virtual summit that Xi Jinping had with African leaders, he himself said that, or called for the DSSI to be extended beyond December. The issue with the China Development Bank, I think, it's also has to do with the way that the China Development Bank loans are classified. In some cases, I'm no expert here, but I remember reading, particularly Deborah Brautinger mentioning that some China Development Bank loans are classified as commercial loans. So I think that kind of adds another complication. But all of this is happening while there's also increasing pressure on countries in relation to their commercial debt, the Eurobond debt. So while China is taking it case by case and not really communicating what's happening in the G20 space, there's also this additional threat kind of to African economies of the possible default on Eurobond debt.
I'm very glad that you brought up Deborah Brautinger and the China Africa Research Initiative, because the folks over there have the most comprehensive research available right now on Chinese debt in Africa. They are far more expert on this than either you or I. And so just really excited to be able to invite everybody to go check out some of their new interactive tools that they have available to be able to see and to fact check even what we're going to say. So let's now get the big picture as to what's going on. And for that, I'm thrilled for the first time to have Alonzo Soto, who is an Abuja-based correspondent for Bloomberg News, where he's covering the African debt crisis more closely pretty much than any other journalist out there. Joining us from Madrid today. A very good afternoon to you, Alonzo.
Good afternoon to you all.
Alonzo, you have been covering from the beginning of this debt crisis what the Chinese role in it. There's two articles in particular that we flagged for our subscribers of our newsletter. You wrote back in July, Africa starts to have second thoughts about that Chinese money. And then in June, you wrote, the ticking time bomb in Africa threatens a global explosion. Those were two very big reports that you wrote for Bloomberg about the current debt crisis. Give us an understanding of where you think we are now based on what you've seen over the past few months.
Well, the way that I look at this is you have to see it in different tracks. And I will say in here that we have 4 tracks. We have the bilateral debt, which is basically what the G20 agreed to in April, which is, we'll give you guys a break. We're not going to charge you principal and interest for this year. And that's from the most developed countries or the richest countries in the world, including China. Then we have the multilateral debt, which that letter from the G20, the initial one in April, you had these guys calling on the IMF, on the World Bank, to try to see if they can provide some relief as well. The IMF has done so, but very little. The World Bank has says that it will not do so because it could threaten their rating as the lender of last resort. And then we have the commercial debt. We have the Eurobonds. On that front, nothing has really moved. So what you see is that until this day, there hasn't really been anything official. There hasn't been an official approach by a sovereign, by a country, by a government to one of its bondholders. It seems that there has been some informal conversations, but nothing that has really been considered to be official. And that is linked to this 4th track, which is China, which is by far just the biggest sort of player in here, along with the private creditors. And one thing that is interesting is that the Chinese negotiation for relief is very linked to the commercial debt, because bondholders are saying, I'm not going to give you any relief until I know exactly how much you owe to China and how much relief is China going to give you, because I am not willing to give you more relief than what China is doing. So you have a very interesting situation in which bondholders are saying, we're not going to carry the burden. We're not going to help out China. We want to know how much China will give these guys in order for us to know how much we'll give them. So comparability of terms in here. So that's an interesting development. And so far, there really hasn't been much advance on the private side.
Alonso, say the DSSI runs out in December as scheduled. What does the worst case scenario look like in Africa? What would a string of defaults look like, both in terms of the African economic situation, but also in terms of the global impact?
Well, I think that, it's difficult to say right now. Oil prices have somewhat stabilized, and that's helping countries like Nigeria, like Angola, Gabon, So it seems that the worst is over for them. However, the economic situation of a lot of the oil and copper and metal producers in general, commodity producers, they're in trouble. So you had countries that were already in serious debt issues and debt troubles, like Zambia, for example. And this is a country that is negotiating with China and is also plans to negotiate with private creditors to reschedule that. So we don't know the full extent. What we know, and I had chats with rating agencies, and they are concerned. They believe there will be more downgradings. They believe that some of these countries will be in trouble next year. Some more than others. There is a distinction. Not every country, not everyone in Africa is suffering the same. There are some countries in better shape. But there are concerns that the finances of a lot of these countries are getting hit very hard right now, and that unless we see a true recovery, a V-shaped recovery, we're not going to see these guys getting out of the hole next year. And what's worse, if we have a second wave like we're seeing here in Spain, there's quite a few cases, up to 3,000 cases per day right now. And in other European countries, that could be something that, depending on the measures that are taken, could really hit the global economy again, and these countries could be in serious problems. So right now, in terms of who is next in the line of default, we're not seeing anybody, with the exception of places like Zambia, and a few other folks that are in imminent danger of default. But that will happen as the year progresses and into next year. That could be a serious problem.
Now, a lot of your coverage has focused on Angola, and Angola plays a very important role when we talk about the Chinese. And it brings up the point that the folks at the China Africa Research Initiative have mentioned quite a bit in their coverage of this, which is that Africa does not have a Chinese debt problem. About 10 African countries have a Chinese debt problem. You mentioned Zambia, Djibouti's another one, Ethiopia, Kenya, those are on the radar, but none more so than Angola. Talk to us a little bit about the relationship between China and Angola in terms of debt.
Well, I think in here, and you're right, if you look at the numbers from Johns Hopkins, really Angola is by far the biggest recipient of debt from China. A lot of this debt is collateralized, so it is linked to oil production. So part of the exports, the proceeds from their exports goes back into paying some of this debt. Angola has been reported that Angola has reached some sort of an agreement with China, but very few people know the details. At least we haven't been able to figure out what exactly was agreed on. It seems that they were.
What do you think it is? What would you speculate the details of like a deal would be, something like that? What are some of the scenarios that we might envision?
I think in here, it may be delaying payments, and by delaying payments will be allowing Angolans to sell more of their oil to the markets instead of shipping it, or instead of getting those proceeds to China. So I think there will be some sort of a delay. I think, you guys mentioned Deborah, Johns Hopkins. They've been doing a lot of research about how, the restructurings that we have seen in the past. China seems to be more willing to restructure. They don't pardon debt. They only pardon a very small percentage of their debt, but they're willing to pardon. So what I see with Angola could be something on the lines of delaying payments, allowing them to sell more of their oil directly to private buyers. Or trying to come up with other agreements. I think that the relationship between Angola and China is a strong relation. There are some historic ties. There's some ideological ties in there as well, at least in the past. Just like Zambia has been sort of the historical, one of the first places where China carried out its policies in Africa. So there is a what I consider, and you guys may disagree, but I consider it to be a strong relationship. And it seems that the Chinese will be willing to restructure some of that debt, or at least delay the payment initially for some sort of to allow Angola to stabilize until things get better on the macro front, which is not easy. And remember that also that deal with China is very important for the IMF, for the IMF restructuring of its program with Angola and for the release of more funds, or to enlarge that initial program.
This crisis, it's difficult to judge the scale of the crisis historically at the moment because we're right in the middle of it. Do you foresee, kind of after a year or two of mitigation measures, that lending to Africa will kind of slowly kind of go back to the normal we've experienced in the 2010s, or do you see this as a kind of like a paradigm breaking event that is going to necessitate new instruments and new kind of ways of lending in the future?
I think it's interesting. I think there's a debate. I've been speaking recently with different academics and private investors, and there is this idea that maybe because of what's happening and the level of crisis that we will see in Africa, that you will see a return to more concessional lending from places like the IMF and the World Bank, lower interest rate, longer maturity. So that we may see sort of the end of this tremendous rise in Eurobonds over the last few years. That may also be accompanied with more lending from China, even more lending from China, but maybe depending on what the negotiations entail and what kind of relief and the pressures that the G20 and the Paris Club inflict, there may be a bit more transparency on those new loans from China. And China itself, as we have talked in the past, actually China itself is trying to restrict that, trying to be a bit more restrictive in the way that it gives lending. So that's one way of looking at it, which is more concessional lending, less Eurobonds. The other way of looking at it, and this is something that some investors and analysts have been talking about, is actually right now in the world, because there's so much cheap money around, because everybody is, the United States and Europe has pumped so much money into their economy to counter the pandemic. You're actually going to see a tremendous search for yield and in bonds. And one of the countries one of the regions in the world that has offered some of the best yields is countries in Africa. So you may see actually a return, depending on how the global economy behaves. If this glut continues, a capital glut continues, you may see a return of investors, and you may see some of these countries issuing debt in international markets again. Remember that, that stopped in March. Once the pandemic hit, a lot of these African countries that had planned to issue, including countries like Nigeria, that was prepared to issue $3.3 billion this year, they all had to shelve those plans. And right now, there's really no horizon for when these guys will issue again. But some investors are saying, actually, this may come sooner than you think, and we may see another record number, or at least a comeback of private debt that these countries desperately need. Now, that could be an issue, right? Some of these countries, as the IMF and the World Bank has warned, their finances are not in good shape. Revenues are dropping at record levels in many of these countries because of the pandemic. So taking on more private debt, which is more expensive and in shorter duration, that may be a tremendous issue. And I don't know if that's something that investors are really taking into account at the moment.
Well, let's talk a little bit about the politics of this debt, because we can't just keep it purely in the economic and finance sphere, because inevitably it gets sucked into politics. Last year, in 2019, your former colleague at Reuters, Joe Bavier, he wrote an article from an interview that he did with U.S. Assistant Secretary of State Tibor Nagy, who has been a longtime China critic. And he said, this is, of course, long before there was anything COVID-19, don't expect any bailouts from us. And what he was indicating was U.S. and presumably European frustration that any restructuring of debt would go to basically repay Chinese loans, and using U.S. and European taxpayer money to do that. And so he was saying, don't expect it from us. So there's a lot of sensitivity, and you've alluded to this in some of your earlier points today, about lots of relief money coming into Africa that will then get shuffled around, and the Chinese get repaid, but everybody else doesn't. And this has been one of the concerns at the International Monetary Fund about special drawing rights. One of the key requests coming from African finance ministers is to expand what they call the SDRs. Now, the challenge on SDRs is that the IMF cannot carve out one continent or one country. Either it does it for everybody or it does it for nobody. And there are concerns in Washington, and this has been raised by David Dollar at the Brookings Institution, that the United States does not want to expand the SDRs, which would be a capital injection, because it's concerned that China and Iran would then get cash from U.S. taxpayers. So, talk to us a little bit about the politics of the debt and the IMF and the fact that the IMF and the World Bank today do not seem to have the clout that they did in previous debt crises, given the fact that private creditors in China now are so much stronger on the debt scene.
Yeah, there is definitely quite a change in terms of their influence. The World Bank, the IMF, the Paris Club. In terms of bilateral and multilateral debt, China is the big player right now. I think that, there's definitely a different approach from the United States, at least compared to Europe, and that's just my observation. When you talk to the Paris Club, when you talk to the French, when you talk to the Spaniards, there seems to be a sense that we can give more to the Africans, and there needs to be more of an effort. And some of them are supporting, for example, the use of the expansion of SDRs. The United States has a much more aggressive tone and in saying how this will and not only benefit China, but it will also benefit countries like Syria and even Venezuela. So there is really quite a more aggressive approach. The IMF was not able to convince the United States to change its position. When talk about expanding the SDR was floated earlier this year during the pandemic, it's unlikely that they will be able to do much from that, much more. The World Bank, remember, this is something that I have talked to some people who. Some academics who believe that somebody like Malpass, actually, when he was at the Treasury, he was considered to be what they call a China hawk. He was somebody who wanted to get more concessions for China and believed that some of the policies China was pursuing abroad were in the detriment of the United States. So if you have somebody like that in a position at the top of the World Bank, pressure will continue on China, at least rhetorically, but I don't think much else can be done. It will be interesting to see if China is able to maybe provide more details about what it's doing in terms of relief, and I'm wondering if that could help China's image in the region and among some of the allies of the region, or at least on this European bloc that seems to be more sympathetic with the situation in Africa and wants to see more relief toward the region. These guys, through the Paris Club, you see more pressure on China. Is not as direct as you have heard it from Malpass at the World Bank, or obviously from the United States government. But there is some pressure for these guys to open up and show more of their cards. And so far, China hasn't really done it. So that's where I think things stand. It will be interesting to see how this develops as the situation changes. Like I said, if the economy the world economy doesn't help and things deteriorate quickly here in Africa, it will be interesting to see how that changes.
You're usually based in Nigeria, and over the last 2 weeks or so, we've seen this big kind of wave of almost like a moral panic kind of running through the Nigerian press and social media about Chinese loans, and particularly about a clause that is kind of boilerplate language in these agreements that essentially says that if there is a default, then Nigeria can be forced to kind of give, or like Nigeria loses its immunity from going into arbitration, and then the negotiations has to go to an arbitration kind of facility somewhere, but it's been taken in Nigeria as kind of all read in Nigeria as saying that Nigeria will lose sovereignty over some of its national assets. What do you make of this kind of wave of anxiety in Nigeria about Chinese loans?
Well, it's interesting because, for example, today the finance minister and the head of the debt manager's office were supposed to actually be in the assembly to speak with some of these lawmakers from the committee. I spoke with the lawmaker, the congressman who actually filed this petition for a probe. He was a member of an opposition party. So what you see here is that you do see demands for more clarity, but it's coming from the opposition. Now, President Buhari seems to have control over the assembly. So he may be able, depending on how he handles it, he may be able to contain this. Now, one interesting thing is that actually Nigeria is not heavily exposed to China in terms of debt. And the Debt Management Office has released information about a lot of these contracts, which are mostly infrastructure projects. So in the overall, I think what is important here is whether this could set a precedent in other places. I think Nigeria seems to be an exception because there is a lot more transparency in terms of its contracts and loan contracts with China. A lot of other countries do not have that. So it will be interesting to see how this plays along. However, I don't see, at least for my understanding of the situation at this moment, I don't think this will progress for too long or really become too much of a big problem for President Buhari. But it is something that is sounding a lot. You hear it a lot in social media, and it's something that Nigerians a lot of everyday Nigerians are starting to be concerned about. This was something that was not in their radar before and is now becoming in the radar. And remember, this is a country that is scarred by the tremendous amount of corruption that you have seen in decades and in recent years. So again, it's something that attracts a lot of attention, media and social media attention. But on the ground, it seems that this may be short-lived, and it depends on how the president handles it at the end. But again, I think it's important in the sense of, will this set a precedent, or will this be something that policymakers elsewhere in Africa or maybe don't believe that is something that is needed because they want to conserve a good relationship with China. One of the things that we saw here in Nigeria was, we had a governor minister saying that he was afraid that if the probe continues, that China was going to be concerned and was going to offer less loans to Nigeria. So that's something that you hear from different government officials here. So that may be something that will stop also other governments from pushing for these sort of investigations, or at least local policymakers from searching this.
Yeah, I'm glad you brought up the issue of Nigeria and that Cobus asked the question, because it's something that I've been writing about quite a bit, almost continuously for the past 2 or 3 weeks now. And this is a crisis that has gone on longer than most of the China crises this summer in Nigeria. And it has a lot of staying power. And I'm just trying to get beyond the superficial, because as you pointed out, the Debt Management Office in Abuja issued very clear statements that said only about 3% of Nigeria's external debt is owed to China, and it's very little, and all of it is tied to key infrastructure projects. So there's a lot of transparency, as you pointed out, as to where the money's going. In fact, just this weekend, the transportation minister and the minister of information and culture took the media to the standard gauge railway project in Abuja to show this is what the money's being used for. But yet, there is just an enormous amount of, and I don't say hysteria to diminish it, but it really is at hysteria level now in social media, on TV. It really is that the sovereignty clause crisis has sparked a lot of deep anxiety in the body politic. And it runs deeper than just the debt. And I'm trying to understand what it is. Now, you pointed out, again, these concerns about the debt come typically from opposition politicians in the National Assembly. So there might be a political angle just to stick it to Buhari, in the ruling party. But is there something deeper in terms of the colonial history, this idea that sovereignty was stripped already once, and here it is happening again. There's got to be something more that explains the incredible levels of anxiety that people are expressing about the Chinese.
No, I think you're right. And when I talked to the lawmaker who started this with the action, I think he talked in a way that reflects what many people in Nigeria fear, which is, is this a new colonial effort to try to strip us of our wealth. I think there are deep scars here in Nigeria about what happened in the oil industry. How a country with so much wealth continues to be extremely poor, and in fact, it is the country in the world with the highest number of poor people. So I think there is certainly something very ingrained in society of how other people have taken advantage of us, and we don't want this to happen again. And I think there is also this sense that, things are not getting better. The pandemic has worsened things for a lot of people. We had the unemployment figures last week, and unemployment has gone up. It's actually the highest in at least a decade since the numbers started to be published. And some analysts think that that's actually, it may actually higher than the official number. So I think there is a discontent in general that things have not progressed, and not only during the administration of President Buhari, but even before that, things have actually not progressed despite our wealth, and the people are taking advantage of us. So I think that there is something in there. But again, I think that, how long this will last and how big it will get, let's see. I think there is a lot of discontent. Let's see how the opposition handles this, and let's see how President Buhari can manage to suppress this inside the assembly. He's supposed to have a majority in there. So let's see how it goes. But so far, I think you're right. I think there is a much deeper scars that explain this reaction to this.
Support for this podcast comes from the Africa-China Reporting Project at Wits University School of Journalism in Johannesburg. The ACRP provides reporting grants, workshops, and other professional development opportunities for both African and Chinese journalists. Follow the ACRP on Twitter at @WitsChinaAfrica or visit africachinareporting.co.za for information about grants and upcoming seminars.
Going forward, how do you see the current crisis reshaping Africa's thinking about lending and debt? To give context, I was reading an article in The Economist today that pointed out that there's been a lot of energy in development circles put into ideas of blended finance, in which traditional development finance institutions, there's a portion of financing coming from them, and then kind of that provides security to then pull in financing from pension funds in the global north and other investors that haven't been traditionally interested in investing in things like solar power in Angola, for example, and that those actually face a lot of challenges and they haven't been nearly as successful as people had hoped. What is Africa's lending landscape looking like after this crisis? And kind of where does it put African development? When we take into account that so much of this lending is for crucial infrastructure.
I think that, like I said before, I think that, for example, when you look at private credit and where this is going to be, where is it going, commercial Eurobonds, I think that is something that from the participation in the debt suspension initiative, you see that a lot of countries are very worried about losing access to private financing. Private financing has been key for the financing of infrastructure in the region, for the financing of different projects. But the fact that countries like Nigeria, Kenya rejected or did not participate in the debt suspension initiative tells you how important it is for them, and that is something that will continue to tap in the future. The problem with and as you guys well know, the problem with the concessional lending is, the series of strings attached to it, and what countries have to do. And again, some of the deep scars in the past about some of these, previous programs with the IMF and the World Bank that led to devaluations that led to more poverty or that led to policies that were not constructive for growth. So those scars are there. So I think that, again, I think countries for a while they will go back to concessionary. But as as some experts told me, as some analysts told me, and some African officials told me, we don't have a lot of places to turn to. There are some interesting mechanisms that are being developed, or at least floated around, which is the idea. UNECA's Vera Sangwe has this idea, this liquidity facility, which is going to be a special purpose vehicle backed by a G20 central bank or a group of G20 central bank, which will basically guarantee new issuances. So that way, by having a AAA backer, interest rates, the value of those loans for African countries will drop. And we're talking about going back to the markets, but with lower interest rates. Because if you look at the coupon and the interest rate of African countries, I think it's something that I'm currently working on. There is a premium. There's different ways of looking at this and different analysts.
A premium's one way of saying it. Discrimination, prejudice, bias is another way that other people are calling it.
Yes, I think that there is a division on that. I think that, you talk to some investors and some analysts who say, actually, there is... When it comes to Africa, you have less data available. A lot of these countries are not as transparent, and also a lot of these countries are new to this game. A lot of these countries, one of the first issuances was Ghana in 2007, so they haven't been around the market that long, and a lot of these countries don't understand the market that well. So there is a risk, and investors on their behalf, they also don't understand this new market that well. So, there is that side. And then if you talk to a few other academics and government officials, they say, actually, there is discrimination. There is a premium that we pay that we believe is unfair. And this is just because everybody paints Africa with the same brush. And every time that there is an attack somewhere or an instability in some other place, we get blamed for it. So, even before this crisis, there was an event, a forum of the IMF with West African countries in Senegal. And in one of those meetings, President Macky Sall, this was a public event, but President Macky Sall, told Georgieva from the IMF, we're paying too high interest rates, and this is holding back our development. So I think, talking about the future, I think there is a sense from many policymakers that, yes, we're paying too high interest rates. For example, just to give you an example of Nigeria, if you look at debt to GDP, Nigeria is actually quite low in the 30s. But when you look at debt to revenues is, on the 70s, and it could go even higher than that, 60s, 70s, and it will probably go higher than that service. So when it comes into debt tolerance, how much more debt these guys are able to get, it's limited because you're paying very high interest rates. And that affects development, right? That affects your capacity to, materialize infrastructure projects that will help your economy grow faster and will allow you to have also social programs. So there is an interesting debate going on about this premium, and where the truth lies, it's more complicated. I think there is, in my sense, is that there is a mix of both things. There are some technicalities and some issues with data and transparency that is hurting African countries, but on the other hand, there may be less of an effort from investors because it's a very young market and a very small market, although it offers very high yields.
Let's go back to that Vera Songwe idea of basically creating, and I don't know if I'm right when I say this, but it seems like it's creating a collateralized debt obligation, much like the mortgage housing crisis in the U.S., where they took a whole bunch of mortgages, wrapped them up into a single equity, and then sold that out under a new kind of pretty banner with a bow on top. There doesn't seem to me any traction for that idea. I know a lot of people in development circles and in the media have been talking about the idea and think it's a great idea, but I have yet to see any AAA or AA agency, either a central bank or a multilateral, kind of say, yep, sign us up, we'll do that. Have you seen any indication whatsoever, even a slightest indication, that that idea has any remote chance of actually succeeding?
To this moment, as of yet, no. So we haven't, I have not heard of any, from my sources that this is taking shape or it will take off. Not at the moment. Yeah, I think a lot of people believe and agree that this is a good idea. This is something that you can do to help African countries that they're in serious problems right now, or they will be in the future. But to be honest, I haven't seen any, at least publicly or even with my sources, I haven't seen anything that shows true backing to this.
Yeah, and Cobus, that goes back to our discussion last week where we were talking about debt, and I went on a little bit of a rant, and I just said I haven't seen much progress in anything substantive. There's been a little bit of details around the edges of what the DSSI has done, what World Bank has done, Paris Club has done, but in terms of the scale of the problem, it doesn't seem like the big donors are responding in the ways that Africa needs or wants, short of what China's doing, which we don't actually know.
No, I mean, I completely agree with that. Alonso, what impact on this whole crisis would it have if China would simply become, extremely transparent about its lending practices? Like if China just threw open the curtain and was like, this is what we're doing, this is how we're dealing with the crisis, these are the kind of nitty-gritty details. How would that change the equation?
I think the first thing is that it may actually serve private creditors. It may serve them to actually get more involved. There are a lot of questions right now whether if investors will get involved anyway, if there's really appetite. It's difficult because you have a wide range of investors, and one of the things that I'm hearing from some of those investors is, if China is more transparent and reveals how much relief it will give to these guys, we are more likely to participate. We want transparency and clarity. So that is one element that could change, the game. It could actually support or give more momentum to the private initiative, private involvement. How is it called? If it will happen, even if China is more transparency, that's something else. But at least that has been the argument that the investors, some investors have been talking to me about. That's one of the key ones. The other one is, I think, in terms of for African governments to understand how will you engage China, and can we engage China as a group, or can we form different alliances? I think that right now, to be honest, there's really just no clarity, and I've been trying to talk to Chinese officials in Ethiopia and in Angola and in Zambia, and we just don't really we don't have any answers. They always tell us to go back to Beijing. So there's really not a lot of clarity. So I think that if there is more transparency, maybe that could help these governments plan better on how they will get this relief and approach China in a way that is more transparent for everybody, and to dispel some of the concerns that you're seeing, for example, right now in Nigeria, right? I think that if there was more transparency, maybe some of those issues could be addressed.
But think about what the downside of transparency might be for the Chinese as well, because that if those contracts were put out there, there are legions of people in the United States government in Washington who will study every single comma, paragraph, period, and every detail. And the moment they see something that they don't like, they're going to take it and whack them over the head with it. And in this context of hyperpolarized U.S.-China relations, I just don't know if the Chinese are going to feel that willing to put themselves out there and be exposed like that.
It could be. But on the other hand, if China is trying to answer to the debt trap rhetoric and accusations, this could be a way of showing the world that they're willing to help Africa in one of the regions that is more vulnerable to the pandemic. So I think you're right in the sense that this opens up a Pandora box that you don't know how it will end up. But there's certainly downsides and there's certainly upside for China in doing this.
Let's close our discussion by looking ahead through the end of the year, get us to December, and then maybe into next year as well. Where are we in this debt? I mean, let's go back to our first question, because there's a lot of moving parts here. Are you more optimistic or less optimistic based on the discussions that you've had with your sources about whether or not there's going to be some form of meaningful debt relief to give African governments the relief they need in order to both sustain their debt servicing and not compromise their credit ratings ratings, and at the same time be able to pay for the public health costs that are really going up quite quickly?
I think that, what is expected is on this bilateral track, which is the G20 agreement, the G20 will meet again during the fall meetings of the IMF and the World Bank, and there is expectation for some sort of an extension to the moratorium. So this moratorium was due in late December. There are people saying another year. There is Ghana and some other African countries saying at least 2 more years or 3. So that seems to be a possibility that, we could see an extension of the moratorium. That certainly can help. But if you look at the calculations and the numbers itself, but, different rating agencies are saying how small this relief is and how it will help, but it's just too small. And the problems are much bigger than this. So, it is a palliative, but it may not be that much. So an extension of the moratorium, also including other countries that are not part of the 73 that are eligible for this. So include some other small emerging countries that don't get to the IDA list. That's also a possibility. I know that, for example, France and has been talking about including some other smaller countries and some other emerging economies into that list. That remains to be seen. So on the bilateral, you might see an extension, maybe some other countries included, but the magnitude of the problem, it's much bigger. So this will help, but it's definitely not going to be a solution. On the private side, on the private side, I talked to some activists, some people who work for NGOs that are trying to get private sector involvement, and some of these guys are looking for what you see in the equity side. They're looking for activist investors, but they haven't been able to find anybody like that. Somebody who may be able to speak up and try to pressure other bondholders into giving more concessions or giving more relief. It seems to be difficult just because of the way this market is structured. That seems to be complicated. So I don't expect much movement on that end. So far it has been no official requests to the private sector. It's unlikely we will see any until the end of the year, unless things get a lot worse. What you may see is that, some countries may end up being forced to restructure. But that's something else. That will be there will be a restructuring event. On the multilateral front, I don't think the World Bank is going to change its opinion. The IMF has been given some debt relief, but this is limited to about, and the numbers may be wrong, but it's about $25 to $26 million so far. So that's really not that much. And the World Bank, through Malpass, has said that they're just not going to participate in this. And instead of doing that, they will just release more liquidity. For them, it's more about releasing funds, and it's not about giving that relief. And China is the big question, right? And we just don't know. So far, we haven't seen anything, in terms of actual official agreements that, we know what it's about. So I don't think the situation is going to change that much overall. So, it will be interesting to see if the economy goes one way or the other, and if that changes the mood, because, when this had a lot of traction was during the worst of the pandemic. In March and in April, it really gained a lot of traction. And if you talk to a lot of these activists, a lot of these NGOs, a lot of people were very optimistic, because it was the first time in a long time that you saw a group of countries acting so fast to try to give relief to the poor countries of the world. But that seems to have been lost, and I don't know if we will ever regain it in the future.
Alonzo Soto is an Abuja-based correspondent for Bloomberg News. He's been writing some excellent reports over the past few months on the African debt crisis and also China's role in the African debt crisis. It sounds like he's got some new ones coming down the line. We'll put links to some of those articles in the show notes. Alonzo, you are on Twitter. Tell us what your Twitter handle is.
Actually, it will be Alonso Soto J, the letter J at the end.
Okay, well, we'll put a link to that as well so people can follow what you're reading and writing and all your latest stories that you do from Abuja when you get back. Thank you so much for taking the time to join us today. We really appreciate it.
Thank you.
Cobus, absolutely fascinating. That was like a masterclass in African debt relief. I'm so glad we had Alonzo on. I've been a big fan of his reporting for quite some time. I do have to say, I'm kind of sticking with my rant from the previous couple weeks that I've been talking about and something I've been writing about, on the site and for the newsletter. I don't see the substantive, meaningful relief that African finance ministers and the likes of Vera Songwe have been calling for. Everything seems to be around the edges, and nobody wants to talk about the fact that the private creditor debt is not moving. Vera Songwe's idea is not moving. We have no idea what the Chinese are doing, and the World Bank, IMF, and the G20 Paris Club folks are more or less not powerless, but their power is so significantly reduced that they're not major players anymore. So I don't know where that leaves us, but it's not a good place right now, I don't think.
No, it's not encouraging, and it certainly looks like for the short to medium term anyway. The African countries are going to take a lot of economic stress, which in a lot of cases actually unnecessary kind of levels of economic stress, which is really going to push back African development. And we have to again point out that for many years African countries have posted some of the highest growth rates in the world. In many cases, it was like 5 out of the 10 fastest growing countries. So this seems really unnecessary, and it's going to to take it from a different angle. I'd actually what do you think? How do you think Africa is going to respond to this? Because it seems like in a lot of ways this really exposes how unfairly Africa is treated in the global market. And do you think that there's going to be some kind of move from Africa for greater collective negotiation or other kind of measures to try and improve its global position?
We've been talking about that for as long as I've been studying African affairs, which is 10 years seriously, 20 years informally. There's been this dream of Pan-Africanism and forming blocs and really negotiating. There's been some hints of that. Again, we saw that in the Guangzhou discrimination crisis, where groups of ambassadors and consul generals in China acted in concert with one another. The AFCTA has been more coordination with one another. But I think in these debt issues, it is easier for China to play one country off one another. At the same time, the needs of Nigeria and the needs of Malawi are so different from one another that it would be difficult to necessarily align those interests of those big powers. That's not to say it can't happen or won't happen, but I'm a little bit skeptical that in the short term, especially in the midst of this crisis, when politicians are up to their eyeballs in one urgent issue after another, from public health to the economy and increasingly social stability, those are all issues. So in the short term, I don't see it happening. I know a lot of people have been wanting it to happen. It's an ideal, but in practicality, it doesn't seem to be happening. The other part of the crisis that we haven't talked about, and I regret not bringing it up with Alonzo, is corporate debt. And one of the things I've been noticing in South Africa is how many companies are getting downgraded, how many companies are struggling to meet their obligations. One of your largest cell phone operators didn't make its debt payments, by the way. C-Cell, I think it's what it's called. And Cell C, exactly, didn't make its debt payments. And that is emblematic of a much bigger problem as well. So it's not just the state level that is struggling with credit ratings downgrades and a debt crisis, but there's also companies and corporate debt that is going to be much, much more difficult. I want to bring everybody back to an essay in The Elephant, which is an excellent online magazine from Nairobi, written by David Ndii, the economist, who he said that yield will be the new extractive resource in Africa. That the coal, the minerals, the timber, the Chinese and others can find that anywhere around the world. Investors are going to come looking for yield. And it was interesting that Alonzo pointed that out, saying that, well, because investors are hunting for yield, given the fact that there's an enormous amount of cash swilling around the world with nowhere to go, Africans are going to have to boost the yields, and that's what's going to you really hurt Africa because they're going to pay more for their debt compared to everybody else. Whether it's fair or not, that's just the reality I think that we're going to be in.
Yeah, it really, it's difficult to not go on crazy rants about the situation. In relation to the commercial debt that you mentioned, I wonder if we're then next year or so going to see like a kind of a buying spree from external investors, snapping up kind of distressed assets in Africa, particularly in relation to things like mobile phone companies, where Africa still is, the really the only large emerging market for mobile phones now. There was discussions like Cell C has had its ups and downs economically, and there was this rumors, I think last year, that China Mobile might be interested in buying into it, and which then that proved to be not the case. But it'd be interesting.
But they floated that idea. I mean, it was out there into the universe. And bear in mind, the China Development Fund is an investor in Cell C, and they were one of the creditors who didn't get paid back. So the Chinese are in the corporate space as well. And one of the areas where we might see some consolidation in the tech sector, we've mentioned this on previous podcasts, is from Chinese actors in Africa to expand their share. So maybe Star Times would buy up either Canal Plus or DSTV if those two are not able to sustain themselves. Hard to believe that 3 pay TV operators can survive in that market, given the growth of IPTV and all the different ways that people can consume media today, while at the same time, the buying power of many of those consumers in these countries is going down. So that might be one area to look at. Obviously, in the mobile space, Transsion is very well positioned. It too could gobble up some market share as well from local players. So yeah, there's probably going to be some consolidation. These type of pandemics have a way of transforming economies, geopolitical power, and turning everything upside down. My suspicion is that next year at this time, the African technology marketplace, the corporate debt marketplace, all of this will look very, very different. For better or for worse. I mean, that's a pretty safe prediction to make, but it's going to be really radical, the changes. I am less optimistic that we're going to see a V-shaped recovery. I believe that we're going to see a really slow, long decline, and maybe some uptick depending on when we're going to get a vaccine.
Yeah. I mean, it's grim. I think at the moment. At the same time, I think for certain sectors like some consumer sectors, I can imagine things might not be so dire. But it is interesting that kind of as we're seeing all of this kind of doom and gloom, we're also seeing, for example, Netflix being very engaged in Africa. Netflix in Nigeria is because really they're pumping a lot of money into the Nigerian market, for example. So it's going to be it's a kind of a mixed landscape, but a lot of it looks pretty gloomy.
So we cover this story every day in our email newsletter. We would love for you to join our community of readers. Let us know what you think on the stories that we're writing every day. You can find some of the stories on our website. You get a 3-story per month limit if you're not a subscriber. For subscribers, you can read it all. So this is the stuff that Cobus and I are hashing through with people like Alonzo every single day. So if you do China, Africa, for your work, if you follow Chinese foreign policy or African politics, for your job as a scholar, as an academic, as an analyst, a journalist, whatever, we think that the newsletter would be great for you, and we'd love for you to join us. And if you use the promo code podcast at checkout, we'll give you a big, giant 33% discount. So go ahead, go to ChinaAfricaProject.com/subscribe and join our community of readers. We'd love for you to be a part of that. So that'll do it for this edition of the China in Africa podcast. Cobus and I will be back again next week with another show. Until then, for Cobus Van Staden, I'm Eric Olander. Thank you so much for listening.
The discussion continues online. Head over to facebook.com/ChinaAfricaProject to share your thoughts on today's show. The guys are also on Twitter, where you can find Cobus at Stadinsky or Eric at Olander. And be sure to sign up for the weekly China in Africa email newsletter by going to www.ChinaAfricaProject.com.